Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market sank early in the week as earnings reports from the widely helds scared investors, and then only to be revived on Thursday and Friday morning out of big reports by Facebook and Amazon and Microsoft, and the tech stocks lifted the market in the morning. But Friday's response was surprisingly limited, with Amazon soaring at one point overnight up some 130 points on absolutely a huge beat. But the rally really seems to be narrowly focused, and that really tempered the bulls, as the focus on interest rates may be even bigger than the focus on earnings, as interest rates this week touched 3%. Also continuing to weigh on the stock market is news out of Apple that their iPhone sales are slowing and their iPhone X production is being pulled back, so that did weigh on the market also. And of course, as interest rates go up, the dollar rallies, and then that puts pressure on the metals and commodity markets. And we saw this week as the gold market pulled back to the downside. Overall, the stock market is following the patterns that we had spoke about really very well. Some good earnings reports are coming, but that brings failures, and seemingly surprising the bulls. We saw a lot of that happening in the financial sector. Some pretty bad-looking patterns that we're seeing there in the banks and investment bank stocks. That is the nature of a market that is fully priced. As you see, the growing competition from interest rates actually making a difference. Correction, we believe, will continue, as we have been talking about it moving down into the May-June period, and we see nothing at all that changes that based on what we're seeing in the market now. Let's take a look at our 60-minute chart of the S&P 500, and we'll take a look at what happened in the last week. This chart shows you this grayed out area, which is the overnight trading, and lots of stuff does happen, of course, overnight. And then the white area is the trading during the trading session. So that is what a 60-minute chart looks like. And a lot of the intraday traders, of course, are looking at charts like that. Take a look at Monday. And you'll see there's some news came out that the U.S. said that they had softened their stance on the Rusal sanctions, and aluminum plunged after that news came out, and that actually gave the market a sell-off right in here, but then it started to come back. But then news had come out that investment manager Gundlach had come out and said that he wanted to short Facebook. I actually did also at that point, and Facebook got a hit, but did better later in the week. Google and Facebook here, you can see on Tuesday, lead the FANG stocks lower as NDX reverses down. This is clearly the worst that the market had acted all week long, and we expected a decline into midweek. 10-year yields got over 3% on Tuesday, and then Cat warned in the morning, and when that Caterpillar news came out, the market really started to plunge, and we got a very big decline in there. It was kind of sluggish overnight here on Tuesday night, Wednesday morning, and then Boeing and Twitter reported earnings, and they were strong, but just simply not enough, and the stocks dropped. Twitter, I'll show you, looking pretty bad right now, and Boeing recovered a little bit of that pullback, but still not looking great to me either. Then we got a rally here all day Wednesday, and then Wednesday after the close, Facebook reported earnings that were, well, very strong, and the market ticked up after the close here on Wednesday. It bounced around here all night Wednesday night. Jobless claims came out here on Thursday morning, when they were the lowest since 1969, as the job market continues to tighten, and we got some signs of wage inflation coming in when we got the report on Friday. So here's the ECB. Their policy came out unchanged. It didn't really move the markets very much, but then we got a strong day and this move up here on Thursday, and then it got a little choppy late in the day. On Thursday after the close, Amazon comes out with their huge beat. That's this bar right over here. But you could see all night long, it just really didn't do a whole lot in there. The GDP news came out. It was up 2.3%. That beat the estimate of 1.8%. And that growth did slow, however. We come down from almost 3% down to 2.3%. Wage inflation picks up at a 2.7% annual rate. Market did okay on the opening, on this Amazon news opens up a little bit, but then the Rusal got weak. It pulled the market down. Tech started to drop. Apple went to the downside, and Amazon gave up about half of what was that 130-point gain. And then the market pulled back pretty sharply, but then you could see the buying coming in again. And here we are with about 2 hours to go in the trading session on Friday, and we can see that, well, there is not a lot going on here as the market just simply this last day, these last few hours just moving, chopping to the sideways. Not a lot that I would say is exciting in the market if you are a trader right now. So that is a look at the 60-minute chart. Gives you a pretty good feel of what was pushing the market around all week. Stock market for the week, little changed really. It fell hard and then bounced back. Bond market, similar, but didn't really give us a sign that there's any real bottom coming in there in the bond market. We'll look at that in the short-term view. It also had an unchanged week. That's after falling early and getting the 10-year yield up to 3%. It's now down to about 2.95%, so it pulled off. But the 30-year now is at about 3.13%. So you have only 18 basis points between the 10s and 30s, and that is certainly getting to be a flat yield curve, and there's a lot of concern about that. I keep saying that the Fed is going to do something to beat the bond market up really badly and get long-term rates moving up pretty sharply, and that'll give them room for the tightening that they want to do later in the year. Because we have the yields getting stronger in the bond market, that attracted buying in the dollar. It was up 1.5% for the week. That is a big week for the dollar, and it gets up to areas that we had talked about also, and even further than that. Gold market, of course, moves down $24 in this condition of a stronger dollar, and the oil market is really kind of flat, as we discussed in our Future Speak show on Wednesday, that it's come up to some resistance area, and I encourage you to watch our Future Speak show every single Wednesday. So that's it for the opening segment. The best and worst stocks are something that's really interesting. We get so many emails from people that say they really enjoy that segment of the show. But first, I want you to watch just a really short announcement here. We want to share a bunch of our analysis with you on the stock market, and do all of that in a new service that is free, and I think that you're going to find this very interesting. It's our goal to always be improving our service. And our stock market charts, well, they're pretty complex. And some people, they don't want to subscribe to our top-level service, getting our charts on their platform. So we've created a new product, essentially a service that describes our stock market analysis for everybody. Short-term traders, swing traders, investors. This is just an amazing service, and I'm going to show you very quickly what's in here. This is the askSlim Stock Index Report, and it's beta. The reason it's beta is because we're testing it out. What we want to do is see, do you like it, and get your feedback. The Stock Index Report has got several pages to it. We start out with the cycle conditions, and you can see that we talk about monthly condition, and we give you the whether or not it's bullish or bearish or neutral. We do the same thing for weekly and the same thing for daily, and even give the dates that we expect if there's a decline for the correction to come down to an end. So it's pretty good information. The next thing we'll show you is our momentum conditions, as again we're looking at monthly, at weekly, at daily, and even at 2 hours to give you a sense for the momentum conditions of the market. Really very, very valuable information. This is our daily momentum chart, and you can see it's 3-month daily, looking at the S&P 500 and the NASDAQ and the Rusal. And we update this on Sundays, so that you will, on Sundays is when the update comes, and our regular full update comes on Thursday morning. So you get a picture of this a couple times a week. Here is the 2-hour index and our proprietary market condition indicator. Once you learn to use these things, just amazing for your shorter term trading. And this is our weekly cycle analysis, and we do this on the S&P 500, the NASDAQ, and the Rusal. We show you our projections and our cycle analysis, and we do the same thing on the daily chart, and we do an overview where we look at all the time frames and explain them to you. Essentially, you'll be able to get this brief explanation every single week, and then have this great feel for the market. It's a ton of information that you're going to get in the stock index report. All you have to do is become a level 1 member. It is free right now because we are in beta test, and for level 1 members, get the archive to our Market Week show. You'll be able to go back and look at things that we've said and learn our analysis. You'll be able to get our special videos. We keep adding videos in there for free for our level 1 people, and the stock index report. This is no cost, as we are in beta and we're testing it. This huge amount of information, well, we'll give you this full update on Thursday and interim updates as needed. Usually on the weekend we'll do one also. And we're doing this for free because we want your feedback. We really want to get a sense for how much you really like this product. And the promise is that I'm making right now is that if we adopt it, it's going to be an extraordinarily low monthly fee. So you can help us right now by subscribing, becoming a level 1 member, and then getting all of that. For the next few weeks, we're going to continue to do this and look for your input and give you all this great information. If you need any help with the subscription and signing up for level 1, just write me at slim@askSlim.com, and I'll help you with that. That's it. This is, I think, an exciting new service that we're bringing you, and we look forward to you signing up and testing it out. Thanks a lot for listening. All right, for the best stocks of the week, we're going to look at a giant mover in here. This was a very, very beaten up stock, and now the tone has certainly changed on Chipotle. Chipotle is a stock that was just one of the giant favorites. It had moved up to over $500, around $500, and then plunged to $247 after they had all these people getting sick. And recapturing the customer has been difficult for them. They had a huge beat, and I'll just explain to you what this chart is for a lot of the new users out there, and that is these are cycle charts. What you see down here is a cycle bracket, and we look for the rhythms in the market, the repeating energies that tell us when it's probable that specific things are happening. And of course, we have a cycle workshop that is just phenomenal if you're interested in learning about that. So you can see in here that there was an inverted head and shoulders that formed in here, and it pointed to coming right up here. You could see it just missed that measurement. It was just beautiful. Then all that bad news started to come in, and it was actually trying to build a bottom. It had one last washout right right over here is it had built this megaphone or broadening bottom that it built in there and then moved up sharply to the upside. You could see the minor or smaller cycle patterns right in here that are very clear. This one barely gave you any kind of a decline, and then the news came out and it exploded to the upside. Huge beat. They increased some prices and that helped. Analysts are all over it, upgrading and loving it again. When the earnings came out, it was down around 400. We said our target was around 440, and you could see it working its way up there. It's a much improved stock. It's going to give some of this up, very likely, and I think that would be a buying opportunity. Once we have a point up here where we understand where the peak is of this move, then we'll be putting in our support and buy areas in Chipotle. A great, absolute great story in here is they have turned this around. AMD is the next one we're going to look at. AMD, not AND. And here you can see our cycle analysis also. Now, you'll notice that we're featuring this resistance zone, and you can see our forecast over here says that it's likely to fail in that zone and then move down again. So there is some softening that's going on in the semiconductor industry, and as a matter of fact, one of our viewers just sent me an email saying that he thought the SOX looked like it was putting in a big head and shoulders top. Well, you could see in here the big double top that was put in right there, and I would tend to agree that there's trouble in Semiconductorville. And we have what's called a negative configuration on 2 cycles in a row. That is this one right in here and this one right in here. You can see clearly they point downwards. When you get that, the odds are very high of failing in this resistance zone, and it simply tells you that this big energetic movement is rolling over. Can it get any clearer than that? That's why we think that there'll be a failure in this area. AMD earnings beat up 11% on the week, and we're not really excited about it when you see that. Under Armour is a stock that we have been excited about. Now, we have been we've been noting that it's building a strong base right in here. When you look at this cycle pattern, big bear market in this as it moved down from 45 to 11. I mean, that is pretty horrible. But then it builds this base. You can see that right in here. I'm blowing it up, where it's now what we call configured bullishly, and telling us that the probability is high that it's going to get above that zone and maybe a lot higher. Resistance up here in the 25s. That's a long way, and I actually believe there's a good probability it's going to get there. Note the big inverted head and shoulders that's formed in here, and that would be the measurement up there over $25. So I think United Airlines is a healed stock. It gets in the support zone and then can't get any lower and then moves up, and that's really a good picture. So I think it's investable as the stock really looks a lot better. Pulte Home, PHM, the next one we're going to look at in here. This one gets up into the resistance zone, and you can see that I have it rolling over in there also. This one not as bad as some of the other ones that that we look at that have had big declines, and that because this still has positively configured upward cycles, and this gets down to about the just below the 61.8%. So I'm not as sure about a failure in this one in Pulte Home. It's more about the interest rate picture that has me believing the home builders are going to be having problems in here. Pulte Home up 9% on the week as they did beat on earnings, but it is at resistance, and I think it's going to have some problem in here in Pulte Home. The next one we're going to look at is CVS. Now, this one in the drug retail category, you'll notice there's a broken dotted line in here. When you see that, you know that we're investigating another cycle that we believe is in play in here that might be more valid. It doesn't really matter in this case because you could see the bottom in here as they're both coming down, and then the rally as they're both pushing up. So pretty much the same. It only helps us time this correction out over here. Again, negatively configured cycle right in here. This is really a sell zone, in our opinion, up above the $72 area. Maybe it pokes its head up there on this good earnings, but overall, not liking it at all. And I think it's going to pull back in there in CVS. The next one we're going to look at is CDNS. Now, this is interesting in here because CDNS is in the semiconductor material category. AMAT, Applied Materials, last week got hit really hard on its earnings, and we saw Teradyne in the same group, which I don't really follow very closely, so I'm not going to show that to you, but get hit very hard, like some 18% on earnings this week also. So CDNS, which is in the same category and really has a negative pattern on here that I'm going to show you, says to me it's in a sell zone. It popped on its earnings, and you could see our sell zone right in there. Earnings beat, but with trouble in semiconductors and the group really looking like it's softening, and with this negative pattern in here. Now, why is this a negative pattern? Do you see this big cycle right in here? You could see the low expected right in this area. Well, it came right on time. This one, the same thing. And then it's supposed to come out and take out this high, which it did, but then it failed and took out this low. It makes it negative, and that says that the decline comes out into June. You'll also note that there's a minor cycle pattern in there, the dotted line. It's not real clear in this really strong cycle in here. It kind of rallies up right in here and pulls back in a minor way. So that's not clear. That happens when you get a cycle swamping. And then it comes up and gives you the second cycle. That's very clear right here. You could see them both in here really clear also. This one rallies and breaks down and makes the bottom way down here. So you got this negative configuration going on that doesn't bottom until June. What does that tell you? The probability is high that it fails in that zone and gets hit again. I would make the probabilities over 70%. It trades down to 35 again. This looks plainly like a short to me, and I don't like it at all. Last one we're going to look at in the best of the week is Baidu, B-I-D-U. And this stock in here, I want to give credit to Costas. Costas is he's taking our cycle workshop, and he really is working hard on cycle analysis. I give him a lot of credit for the work he's putting in it. And lots of our people are writing me and putting in a lot of work too. But he sent me what he thought was an alternative analysis to what I had, and you know what? It looks good to me. And I put that on our chart in here. Whenever I do that from a member that sends us information, I try to give them credit for it also. So what he saw essentially is that there was this big pattern right in here, and that there were also what we call harmonic thirds going on in here, just like music. You can see that right in here, and that said that this rally was likely to fail and then pull back in here, give you one more rally and pull back again. So it really looks like we're going to be in a very choppy period in here, and like rallies should not be able to hold up in there. So that is Baidu. Costas, thank you for sending me your analysis, and love getting that kind of stuff. And again, if your analysis is better than my analysis, I'm going to take it. Why not? Because, you know, everybody's doing this work, and I think that it's fantastic that if you find something that I didn't see, well, I'm going to bring it. So thanks a lot for that. That's it for the best of the week, and we're going to be right back with the worst. All right, for the worst of the week, you know, I was talking about the stronger dollar and that material stocks, that materials had moved down, gold had moved down, and the biggest loser for the week is FCX. FCX is both a copper and gold stock, Freeport-McMoRan. And this stock, you can see in this very, very busy look at a chart in here, that I have, well, a lot of information in there. If this is a copper and gold stock, then essentially what I want to be doing is looking at the cycle analysis in copper and gold. So I've done that in here. This is right there. You could see the copper. Right here you could see the gold. And this is the DBB that I have in there also, which is the base metals. So I'm looking for the correlation between the metals and FCX. Well, they came out with earnings that missed. And this is just not a very good pattern when you look at it. I'm going to show you what looks so bad based on cycle analysis. So here is, you can see these black cycles right in here. That's what we're really focused on. And you can see those, how they shaped up right in here. So the bottom is the ideal cycle brackets, and the top is the real chart, how it shaped up. Here's your next one right in here. You can see that, you know, follows the pattern nice, hits support, rallies, gets up to the 78.6%, and fails, and then breaks underneath the support. That projects out right over here to June. Now remember, we're talking about corrections in the stock market that last into late May or into June, and this is perfectly in alignment with it. It has what we call a cycle support breakdown, and the stock has got problems. Take a look at the daily chart in here, and I want you to see that it really was very well signaled that this earnings report was going to be having some trouble in there, and it actually broke an island pattern, and what we had was momentum that was pretty choppy. Now the momentum is clearly negative. We're going to look for a couple more days down and a rally, and this rally is a high probability short when it comes. So that is a look at Freeport. There on the right is your daily chart, on the left is your weekly chart, and that's how I set it up all the time. So bad looking pattern in here, and I would say if it rallies, it's a short. Next one we're going to look at, big decliner in here, is MGM. Note the double top formation in there. One of our modules in the cycle workshop explains how cycle patterns bring these formations. The formations are not just two-dimensional little pictures on a chart. They are caused by the energetic movements of cyclic patterns. Now in this case, you could see the minor cycle right in here, the dotted lines, you can see that, and then it rallies and then comes down, makes the double top. This harmonic family created this double top that you see right in there, and this bearish pattern. So now we're in this probably last 2 or 3 weeks on the downside in here, and then it likely rallies and fails somewhere up over here, but once that bottom is in place, you have a little room. But that's what a good cycle chart looks like, that follows the patterns really closely. There's your blow up in there, and you can see that double top that formed, or M top as some people would call it. MGM top line beat, but their adjusted earnings missed, 12% down on the week, and analysts are downgrading this one right now. U.S. Steel, the next one we're going to look at in here, and you can see in U.S. Steel that there is a declining yellow corrective phase. That's what that means. That's the time period that you expect rallies to fail. If it gets underneath that cycle low right there, it's going to turn red. There's been a lot of warnings here in U.S. Steel. Earnings beat, but they warned of market uncertainty, and especially around the tariffs. And this one looks like it's going to decline also out into late May, so we would be looking for, you know, any rally possibility as a shorting opportunity in there. TRIP, T-R-I-P, is the next one, and here you can see beautiful cycle pattern in here. So Expedia reported, and Expedia did great, and now TRIP, they're moving down. TRIP's earnings are on May 8th. And this really looks to me like the perfect inverted head and shoulders forming. You can see that in there. Now, the only way it kills the inverted head and shoulders if when earnings come out, this thing breaks big down over here, and then it'll be in bad shape. So right now you could see that forming. I don't have the inverted head and shoulders measurement in there because, well, it's not formed yet, right? What we need to do is to get the bottom in here and then start to move up. So it looks like it's forming. It looks like we have a strong base built, and this is a stock that I would say has a high probability of getting ready to move to the upside again. So bottoming in there very soon, and you can see our upside projection coming. It would have to bottom, move up, get above this level at about 47. Well, that's a long way before you get that inverted head and shoulders completed. In the meantime, we think it is a buy in these next couple of weeks. Twitter, man, is there ever a disappointment there when you look at Twitter? Now, we were bullish in here, and we caught a lot of upside move. And then when this huge evening star formed, after the Facebook data breach, we got really nervous about the stock. But it came down and bottomed to where it was supposed to. You can see this declining phase. It bottoms, gives you a big rally. This declining phase, it bottoms and gives you the rally. But it fails right over here in the intermediate resistance zone and almost gives up the whole move here. That's bad. You can see the engulfing pattern right in here. Well, the tone has definitely changed. Earnings beat, revenues beat, users beat, 10% decline on the week as they come out and say that they expect a deceleration into the fourth quarter. Well, that's the whole year from here, and that's why that stock is taking that big hit. That is a big hit. You know, sometimes we have stocks that we really like, and all of a sudden the patterns change. I had a conversation this week with somebody who wrote me, talked about the fact that, you know, I'm kind of an unusual analyst. I'm very bull bear agnostic. I just want to do what the charts say, and if I believe something and then something changes and the highest probability is opposite to what I had believed, well, I'm going to believe the change because that's what I do. And I think it's important to have this discussion about being bullish or bearish agnostic, not carrying a bias, being open-minded, being flexible, and that really gives you a good opportunity to avoid some real problems going forward as a trader or an investor. So I had to just stop for a moment because Twitter is something that has really changed in the way that we look at it, and I wanted to discuss that. The next stock we're going to look at in here is Triple M, MMM. This is the old a stock that I traded on the CBOE floor when it was still called Minnesota Mining and Manufacturing Company. That's where the 3M comes from. A lot of you guys out there that haven't been around here long may not know that. Well, this stock has absolutely been decimated. And interesting how the manufacturing sector and now also the defense sector is really looking bad. Maybe there's peace in the world coming, who knows? But the defense sector is also really breaking down. I don't have any of those to show you today, but maybe I'll do that as a special stock sectors video in the coming week. Here is Triple M, and you can see a cyclical pattern that is beautiful and a perfect breakdown. What I want you to see in here is that this gives you a pretty good example of how the cycle brackets, in other words, give you a picture of the average number of weeks in a cycle. This is really interesting because you could see this low here came at 22 weeks from this low. This low came at 22 weeks from the previous low, and this low 21 weeks from the previous low. This one 22 weeks. So this is 21 weeks, this is 22 weeks. The perfect rhythms that you see right in here as it continues on the upside, has a big break and a rally and a failure below that level. That is a negative looking pattern, and it's too late to sell, really. You're probably going to get it down to about 180, but that's in the next month. That's really our target, the major 78.6%. This is definitely a very broken stock. Nice cycles to look at in there, and a nice picture of more trouble, and a stock that has definitely broken down. Note the 34-week moving average often gives you really good support, and then when it breaks down below it, man, it can be in a lot of trouble, and you see that looking at Triple M. The last stock we're going to look at is eBay, E-B-A-Y. This looks like a broken stock to me also, and I'm telling you that prematurely. First thing to look at is the 34-week moving average. Again, support, 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 and now breaking down under it, looking like trouble in there. Here is your important cycle low, and a violation below there is negative and would suggest a major top. I would say that the heyday and the days of the big growth in eBay are well behind it, and you know, they got rid of PayPal, and now they're looking at ways to do things on their own, and I don't think they're very successful. They're going to be very successful at it. The timing is for a decline into late May. You can see that. I think it's going to go lower. 10% down on the week. Their earnings missed, and you can see the action in here as it engulfs right over here. It engulfed right over here also. It engulfed right over here also. There are sellers out there in this stock, and I think it's going much lower. So you can see this last low right over there. That's 34 bucks approximately. I think it's headed there. Then you probably get some false rally here, and then maybe much lower. I would venture to say this could be one of the worst patterns, and maybe projecting out to much lower prices into the 20s maybe in the second half of the year. So eBay is a very bad looking stock when you look at that, and I think if it picks up its head, you got to sell it. That is eBay. That is the worst stocks for the week, and I'm going to be right back with my short-term view for the coming week. All right, short-term view for the coming week. This is absolutely the most watched segment of this show. Now, what we're going to show you is our daily analysis on the 5 major futures or ETFs in each of these 5 major segments of the market. If you want to see all of that analysis, our weekly and daily analysis on 23 different futures contracts, be sure to become a member and watch Future Speak. That really gives you the really in-depth analysis of these futures markets. So we're going to start out by looking at the daily chart of light crude. That's where we always start. Before I do that, don't forget, follow me on Twitter, and that's askSlim. For YouTube, where we're posting quite a number of videos, and this show often goes up there. Make sure that you become a YouTube subscriber. Give me a thumbs up if you like this show, and if you don't like the show, give me a thumbs down, and then write to me and tell me why, because I want to make it better. So give me your opinion about it. Also, our level 3 is what we have our special going on right now, which is our rankings on the 80 best symbols, 3 different time frames that we look at in there, plus our option bias indicator and our setups that we put up a few a week usually, and then all of our videos, 300 or so in the library. You'll learn a ton. All of that we'll give you for 43 bucks if you try us for a month. Just write me for a half-price link, and you'll get this tremendous amount of information. And don't forget about the stock index report. You just have to become a level 1 member, and that will then give you access to that while we are in beta test. All right, for the short-term view, last week I was about 70% correct. The cyclic patterns in most of these things have been following really closely, and I like it when it happens. I especially like it when when I catch some unusual shifting going on. And I analyzed that correctly. I've had some conversations this week about cycle shifting, and if you're taking that futures, if you're taking that cycle workshop, you'll understand what I'm talking about. So we're going to look at light crude here, and that's /CL. What we had said last week was that, well, we thought it would come off a little bit, but momentum was strong, and we thought it would be very resistant to declines. And you could see that's really what happened in here. I only gave myself half credit because it really didn't finish much to the downside. So when I say 70%, I only gave myself half in this case. We still expect that it's going to get down to this area of about 66.70. Note the slim ribbon, the upward momentum in there, and that shows you excuse me, how that 13-day moving average is often support in there. Sometimes the slim ribbon gets really tight and the momentum is choppy, and it's moving sideways. You don't get some good information. But when the slim ribbon starts to open up, you'll see that that's really a good time. And this is a bullish pattern that we're looking at in here. So we're going to look for a little bit, maybe a little dip in here. Worst case, maybe 66.70, and then move up again. So we're going to call it an up week in here as we're looking at this bullish formation right in here, and then likely to move up. So beautiful, that is bullish, and we're going to call it bullish and an up week. Take a look at the dollar, DXY. Lots of people watching the dollar right now. And you can see this shooting star right in there as it gets up near the 100% fib extension. The target zone that you see right in here is essentially between the 78 and the 100, and it nicely got up into there. We had been looking for a move up to 91, and this week we talked about 91.50 early in the week, and then up here at 205, 92.10, and it tried to get there. Now, if you look at the pattern in here, and this is the dotted lines are showing you that it was a shifted pattern, and we're going to look for it to roll over a little bit in there. The shooting star is significant, momentum positive, really positive, and this support zone is rising. It's actually a little bit higher in here right now, so we'll put the new ones in there for next week. And this says that you're likely to get a minor down week just as it rolls over and then moves up again. So we're looking for this, right? We're looking for this little bit of decline and then a move up. And we'll call it maybe unchanged to a very minor downside week in there. And that, you know, if it comes down in here, we expect that by late week it's going to be moving up again. So this is a pattern that still looks like it's going to continue to weigh on the euro, weigh on the gold market, silver market still, because it's still strong. The euro currency /6E, I'll show you this because if you use it as your proxy for the dollar, we were bearish. We thought it would break down, and you can see that the momentum turning negative, the slim ribbon expanding negatively and showing you right there how negative it is. So, you know, we said the dollar probably going to go down a little bit and then go up. We think that the opposite will happen in here. And if you get a bounce in here in the euro currency, we think it's going to be a sale. We're going to say that small bounces fail and the momentum remains negative in the euro. Look at the gold market. By the way, you can see that I have this set to 2-year daily, and then I have to tighten this up. That gets these cycle brackets in line properly. Sometimes they get out of line when you're only in shorter time frames. So you can see in here the gold market broke this cycle low here. That's a violation. We warned last week that this really was not looking good, that, you know, there was likely to be some downside movement, and that was because of the dollar, and you can see that actually happened. We talked about a range of 1320 to 1370. So right now we're 1323. We got a little bit lower right in here. Now the risks are going up in here when I see this, and we're actually looking for, and you can see our, I'm going to come back out here a little bit. You can see our projection right over here is to about 1301, 1302 over the next 1 to 2 weeks. So because we think the dollar is going to give a little bit of ground in here and then bounce back, we could see us getting a little bit of a pop in here, but then kind of a washout period here into May. That could set up a much better period, and we think the second half of the year is the best period for the precious metals market. So we're going to look for 1302 over the next 1 to 2 weeks and a choppy downward move, and the highest risk is to the downside. And if there's going to be any acceleration, we think it will be there. And when you get into these areas where these cycles are all pointing down together, that has the highest probability of negative acceleration in there. We talk about acceleration in our workshop also. /ZB, you can see this right in here, and talk about downward acceleration. It did it right there. This cycle really shifted over and got longer and gave you a tremendous amount of pressure. This big decline right in here tells you a lot. It says that the downward momentum that's in here still exists. So we're going to look for a rally that fails. The upward area we're looking for is 143.20 to 144.08. So we're going to look for this kind of a pattern in here. Because we think it's got a little more upside room and then rolling over, it's probably a small week in there as there's room to rally and then probably not hold. We have that marked as a sell zone, and that is because there's not a lot of likelihood it's going to be able to get any real upside movement that holds unless the stock market collapses. And we don't really think the stock market is quite ready to collapse, so that's probably the reason why the bond market will not be able to hold an upside move. We'll just call it a small week, getting up into that sell zone and then rolling over. So the stock market, it followed what we had thought really closely. We thought it would fall into the mid portion of the week and then get a bounce. That was just spectacular, as it was really spot on and followed the patterns, well, almost perfectly. So much that it came down and touched the bottom of the minor support zone that you can see right in here, and then got the bounce. And it's now bouncing into a minor resistance area. So we believe that this rally and this decline right in here was setting up another upside move. Now, some people are saying to me, well, this looks bullish. Why wouldn't you be looking for much higher prices? Well, the thing is that what we're looking at is our intermediate patterns, which are really negative, and showing us that it's very unlikely that rallies will be able to hold up. Now, we're going to look for the potential of that 78.6% right there, because we're in, see the dotted line here, we're in this rally right over here. This projection is a little bit lower because, well, I want to be more pessimistic, but there is the possibility right over here. These prices that we're looking at are 26.78 and 26.95. I believe that early part of the week we're going to get up into that zone up there and then roll over. This little dotted line right there is a minor VTL, and that could be the area that holds it. It could pop up through it and then move back, so we're looking at that. And right now that's at around where is that? That's around 26.87 or so. So that it gets you right into that area that we're looking at. So those are important numbers right there, and we kind of think it's going to try and then roll over. So attempted rallies fail, falling in that area. Late week and next week is when the risks really pick up. So we think we're going to do something like this and then roll over, and then we get into this period of high risk. Man, these periods over here, which line up with the intermediate weekly patterns that are pointing down, and we've been talking about late May. Well, this is a period of extraordinarily high risk. We're going to be looking for a big failure into that period. In the meantime, for the coming week, we're going to look for attempted rallies into those areas, get up a little bit, and then not be able to follow through, and then roll over. We're noticing a little weakening in the Rusal, which really has been the strongest of all of the indexes. That may be significant in here. We'll see if that then becomes the leader. Now we're getting past most of the earnings season. There's not a lot of upside drivers when we're looking at it right now, and we kind of think that we will see the stock market not be able to hold the upside, and the risks, as I said, really mounting. That is it. Hope you loved the show. Make sure you could send me emails and tell me how much you loved it or how much you didn't. And don't forget, follow me on Twitter at askSlim. Become a YouTube subscriber. Write me an email if you want to get our level 3 half price special for a month. And sign up for level 1 if you're not a member at all, and you'll be able to beta test our stock index report. All of the people that are members already at all levels are getting the stock index report now. So we're getting a lot of people to beta test it, and we really want to bring this out as a product we adopt. And you know, like I said in that little piece I did before, the price is going to be amazingly low because we want it available to as many people as we can get it out there to. Well, because we think it's great. That's it, and I will see you next week. I want you to be so careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been